Hello, hello, hello. Long time no see. Come on in, come on in, come on in. Today I am going over deductions. I get asked this question a whole lot. So I'm going to break down some items that are normally forgotten about. So come on in, come on in, come on in. These are the 10 most overlooked deductions that you need to know about. Okay. So I'll give it a minute for you to come on in, come on in, come on in. It's been a minute. You hear? I am so happy, happy, happy to be back. So come on in, come on in, come on in. I am going to close my email so I don't keep getting these pop-ups. I see I keep freezing. So hopefully it gets better. I am going to get started in 10 seconds. 10 seconds. Come on in, come on in, come on in. If you're watching this on the replay, please type replay in the chat. Introduce yourself and your business. Tell us where you're from. So anybody that see it later on can hit you up if they're interested in your services. But like and share, please, and thank you. So these are the 10 most overlooked deductions. Okay, so happy Tax Tip Tuesday. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. And I want to tell you that I bring you over almost 40 years experience in bookkeeping, accounting, as well as tax preparation. So with that being said, I have a master's in business and accounting as well as public administration. So I am bringing to you some skills, some knowledge, and my expertise. So welcome, welcome, welcome. And so number one, home office deductions. I want to clarify some things on this because people get this confused. People think that you can write off 100% of your rent, 100% of your utilities, 100% of everything because you have a home office. You cannot because you live in that space, okay? So it's based on percentage of square feet. So if your house is 1,000 square feet and you use like a kid-sized room, right? Let's say you have a 2-bedroom and your room that you use for your office is like a kid-sized room. That's about 400 to 500 square feet, okay? If you use that whole office as or that whole bedroom as your room, as your office, sorry. If you have like a bathroom size area, that's about 200 to 250 square feet. So that would be a percentage of the 1,000 square feet. It's not 100%. So people think that they can write that off. Now, I will tell you, you can write off 100% of your internet, okay? But if you, like me, I have triple play, right? My house phone I write off because I only use it for fax. I don't use my house phone. My internet, 100% for business, right? But I watch the cable TV, so I don't get to write off 100% as utilities for the business use of my home, okay? So be mindful of that. You can write off quite a bit for house office, but again, it's based on the percentage. So it does include any repairs, it includes any landscaping. If you own your home, it can include your mortgage, your property taxes, your mortgage interest premiums, right? There's other deductions. If you actually have people come to your office, right, your home office, you can even write off a bigger portion besides just that room or that area for the bathroom, right? And depending on your business, it could be the kitchen. Depending on your line of work, it could be different areas of your home. So childcare, for example, childcare normally use quite a bit of the home for use for the children, right? Whether it's for storage, whether it's for like the kitchen, you have to prepare meals. Of course, 100% of the area that's used for the children. Let's say you have a backyard, so a piece of the backyard, right? The maintenance of landscaping, things like that. So depending on your line of business, you can write off more than other businesses when it comes to business use of home. With childcare, you also get to write off either the percentage, the square feet percentage, or the number of hours you use for your home as a childcare. Okay. So sometimes that percentage is more because of the number of hours that you use. So, as an example, I have a client that does 24-hour service, right? So she gets to write off quite a bit because she's available for parents at all times of the day and night. Okay. So she write off a little bit more because her hours of usage is much more than just the space that she uses. Okay. Another piece that people seem to forget about is the startup expenses. So just because you haven't started making money yet in your business does not mean that you cannot write that off. Okay. You write off when you first start thinking about starting a business, whether it's your registration fees, whether it's an LLC fee, a franchise fee, um, branding, trademark, logo prep, whatever it is, those are startup costs. Okay. Those are expenses that you get to deduct, although you have not started making money yet. You might not have even formed the business yet. However, those are expenses that you get to write off as part of your startup costs. Okay. And again, depending on your line of business, there may be other items that you had to do, right? Like licensing in order to start. So the fees that you pay to prepare for licensing, so continuing education, right? The licensing fees and any other fees, membership fees that you have to have as part of your business, right? You get to write those off, although you haven't even started your business yet. So you would start recording those expenses now, although you have not made money, okay? So business use of your car is another one, number 3. So with business use of your car, you get to write off the mileage and the bridge tolls and the parking, okay? It's either miles or actual expenses. So people get confused like, oh, I'll write off miles this year. I'll write off my expenses, actual expenses next year. You can't do that. You pick a method and you stick with it, okay? You can go from one method to the other, but you can't go back, okay? So keep that in mind. Now, what I always say is miles will always net to more only because, like, if you have a major repair done on your car, you're not having major repairs on your car every single year. So if you do actual expenses, then you're going to have to keep doing actual expenses where you might not have as much. Now, people also think, like with the home thing, that, oh, I can write off everything. No, you cannot write off everything if that's your only vehicle, okay? You have to write off the portion that's only used for business. Now, there's a caveat. You cannot write off commuting miles, okay? People get that confused as well. Now, depending on your line of business, it may not be commuting. Like if you go to meet clients, right? That is not commuting. Like I have an office in Jack London Square, downtown Oakland. I only go to the office to meet in-person clients. So I write off 100% of my miles when I go to the office as well as parking, because otherwise I don't go. I do a work from home. I work from my home office, okay? So I do write off 100% of that. Or if I go and visit a client or take a client their taxes or take a client some documents that they have to sign, anything like that, then I write off those miles to and from that client. Okay? But if I went to my office every single day, whether I had a client meeting or not, that's considered commuting. Okay. So like work, you cannot write off those miles you commute to work. That is not deductible. Okay. So business use of your car, if you have more than one vehicle, I would say dedicate one of your vehicles as the business vehicle and only use that vehicle for business. Now, if you only have one, then you want to keep very good records, and that's in case of audit. But then it's also at tax prep time. As accountants look at you like, okay, well, how many miles did you use, right? How many of these miles was for business? You can give me your start and your ending miles, but you didn't use 100% of your mileage for business. So having accurate records matter when it comes to writing off what you can write off, okay? So professional services and subscriptions. If you pay anybody to do something, so remember I mentioned about the startup cost, you pay somebody to create your logo. Whatever that cost is, you get to write that off, okay? That's considered a professional fee. Those are also anybody that provides you a service and you pay them for it. If you pay them more than $600, you're supposed to give them a 1099 at the end of the year. You're supposed to report it to the IRS, okay? So when you're dealing with professional services, you are supposed to get a W-9 to get their tax information so that you could send them a 1099 at the end of the year, okay? Other professional services or subscriptions is membership. So as a licensed life insurance agent, I also have subscriptions, right? To keep me abreast of what's changing. Also as my tax preparation, I have subscriptions so that I'm aware of changes in tax laws, things like that. That cost is deductible for me, okay? So any professional fees, whether it's continuing education, so keeping that in mind, I have events coming up. So I do a masterclass. I have one coming up on August 9th. It's at 5 p.m. Pacific Standard Time. It's free, so you wouldn't write that off, right? But if you took advantage of my offer, you would write that off. So anytime you work with us, 100% of it is a business deduction, okay? So you want to make sure that you track these type of expenses so you could get full deductions. I get asked this all the time. What can I deduct? What can I deduct? So that's what I'm going over today. The 10 most common or overlooked tax deductions. Okay. Travel expenses. If you're traveling for business, whether it's for a conference, I go every year to Cabo or to Mexico. I'm going to Mazatlan this year to plan my next business year. So it's a business trip for me. 100%, because I go to get away and kind of reset for my business. I write that off, right? Even if I go on a trip that I thought was personal, because I always bring my laptop, it's going to always be business for me. But as long as I'm talking business with somebody while I'm there, I get to write that trip off. Now, you may have heard where people have taken their personal trip and extended it, or did a business trip and extended it to have some personal time. Then you only want to account for the expenses, hotel, transportation, meals, during those days that you conducted business, okay? So if I did a 7-day trip, 4 of those days I worked, 3 of them I didn't, then I'm only supposed to write off those 4 days, not the whole 7 days. Okay. But because the way I do it, it's a working session for me, I make sure that I take care of business every single day. And that makes my full trip deductible. Okay. Including my meals, transportation, airfare, all of those good things. Huge one, bad debt. If you had a client that give you a check and it bounced, or if you provided a service and did not get paid for it, that's considered a bad debt. It's uncollectible. You get to write that off as an expense, okay? That's one that's heavily missed, because there's a lot of people that provide services in advance of getting paid, or only get paid for half, and then you don't get paid for the other half, things like that. You write them off. For me, I don't write none of it off. It stays on my books until I collect. You hear me? I ain't writing off nothing. The only way I'll write it off is if the person passes away, right? Because it's uncollectible, 100% uncollectible. Or like if there's no way that you're going to get that money back, or that money that you earned, then write it off. It's a bad debt. Now, if later on you do end up collecting that money, then you count it as revenues, okay? Otherwise, it's missed income that you get to write off, okay? Continuing education. Anytime that you pay for education for your craft. Now, I'm an accountant, right? I also do taxes. So Even when I pay for coaching that's not in those two particular areas, I still get to write it off because it's still professional development, right? Whether it's coaching, whether it's marketing tools, all of those things. If I paid for it or if I upsell to their VIP, right? I told you I have some events coming up. So my master class on August 9th, look, I took us back a whole month. On August 9th, that's a free master class. But I have an in-person intensive. It's called Intensify Her. Okay. It's a business intensive where I have special guests talking about money management for your business. Okay. That's an in-person. We have a VIP. That VIP, you get to write off. By the way, it's first 10 and 10. That, matter of fact, I'm going to drop it in the chat. It's an Eventbrite. It's called Intensify Her. Intensify Her. It's in person in Oakland, California. My event, but I will be having a link sometime soon. But the VIP is for 10 days only. So if you go to my About All Things Financial page, you will see it posted there, right? So the first 10 people, it's $250 off the ticket right now. That ticket price is only going through September 31st, right? Or the first 10 that get it. I think there's a few slots left. So take advantage of that, okay? Because in our VIP, we are not only having a VIP brunch, but we're having a VIP networking hour at the end of the conference. Plus, you get special gifts. We'll have raffles and stuff like that. But we have some dynamic speakers that I am waiting for the contracts to be signed. So I'm excited about that. And of course, myself. But if you pay for that, right, you get to write that off. Okay. It's continuing education for your business. Okay. So continuing education, because you always need to develop your craft. Okay. Always invest in yourself and your business. Okay. Whether you invest in your business, it's an investment in yourself. Or if you invest in yourself, it's an investment in your business. Because every time that you further yourself in your business or in your mindset or in coaching and any of that, it's a write-off for your business, okay? And you need that to stay relevant in your industry, okay? Intensify Her business. I need to put my TM. I trademarked that. Business and incentive. Intensive. Okay. Okay. So the next. Home, internet, and phone, I mentioned that as part of your business use or office use of home, right? Retirement, depending on your business structure, you get to write off retirement through your business, okay? That could be a 401k or Roth, right? Self-employed 401k or SEP IRA. You get to write off even more than what you can as an employee, okay? So be mindful of retirement contributions. That's a way to defer money from your business as wealth to you that you don't pay taxes on until you actually use the money, okay? So be mindful of that and take advantage of retirement contributions. And then charitable donations. If you give to charity like I do, you get to write that off through your business, okay? If you provide a service that you normally would charge for, you get to write off that piece as charitable contribution. So like I do the tax prep for my nonprofit for free, right? It's not free though. It's a donation to the business of my time and expertise. Therefore, I write off what I would have charged them as a charitable contribution, okay? So I'll recap. These are the 10 most overlooked deductions for tax deductions in your business. The home office deduction, startup expenses, okay? The business use of your vehicle, professional services and subscriptions, your travel expenses, bad debt, a huge one, bad debt, okay? Continuing education is another huge one. This is something you should be doing every year anyway. You should be furthering yourself professionally, okay? So those costs are a write-off. Your home internet or phone, right? Cell phone as well, retirement contributions, and charitable contributions. These are things that people forget about all the time. Okay. And I often get asked, what are some deductions that people could use? Those general ones is really across the board. It's just depending on your industry, is how you treat what you write off. Okay. So I use the business home expense as a perfect example. If you have a child care, you could write off besides just the square feet, you could choose square feet or the number of hours that you actually operate your child care. Okay. So you would probably want to do square feet if you have not just a dedicated space within your home, but let's say you have a large backyard that you have set up for your children as a play area for your child care student, right? Things like that. So depending on your business type or business activity, you get to write off even more than just a general write off. So those 10 that I just listed is across the board, but there are more deductions based on your industry. Okay. So you can take advantage of a free consultation with me. I did not do you could go to my website. I know that by heart. TLJ Professional Services, TLJ Professional Services.com, and do book appointment as soon as you get on the page. But follow us on all platforms, whether it is the About All Things Financial page or the TLJ Professional Services page, linked it. I have a YouTube channel. Follow that channel as well, Facebook as well as Instagram. Okay. So follow us on all platforms for weekly tax tips. So I am happy to be back for Tax Tip Tuesday. Okay. So today's topic was the 10 most overlooked deductions that you must know. Okay. So it's been my honor and my pleasure. Again, this is Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. And this has been the 10 most overlooked tax deductions that you are allowed to take in your business. Okay. If you missed it, type replay and take your notes. Okay. Get a pen and paper ready, because these are deductions that are commonly missed that you can write off. Okay. Take advantage of the free consultation at tljprofessionalservices.com. Book appointment. And I look forward to speaking with you. You have a blessed week. Enjoy this beautiful weather if you're in the sunny California. Be blessed.